This is Retirement Roadmap Radio with Mark Fricks of Master Plan Retirement Consultants. Listen in as we address your retirement concerns and provide insight to help put you on the path to achieving your retirement goals. And now, Retirement Roadmap Radio.
Hey folks, welcome back to Retirement Roadmap with Master Plan Retirement Consultants. My name is Evan, and with me as always, retirement planner Mark Fricks. Today we'll be taking a look at a specific tangible asset. Many folks are interested in precious metals as an investment, but are less informed on what precious metals can provide to your investment portfolio and why they can be a useful addition, especially in retirement planning. From an investment standpoint, precious metals typically include, of course, gold and silver, but can also include palladium and platinum as well as some other options. The reason that this topic feels especially pertinent is that gold recently reached a historical all-time high at $2,195.15 per ounce.
I'm glad you included the 15 cents. That's very important.
It is very important, especially in buying and selling.
That's right.
Now, generally, gold has a negative correlation to the market, very loosely, meaning that the market goes one way, gold will go the opposite. And it can be a meaningful hedge to include in a portfolio.
Yeah, we use it in that way. You know, we've been talking to clients lately about volatility in the market. And we've noticed, Evan, as you know, since the year 2000, the market has become much more volatile. And so, you know, clients are asking why. And actually, the market has averaged less over the last 23 years. It's averaged 6.26 through the end of 2023. And so we're getting less return and much more hills and valleys. And so precious metals, and particularly gold. Gold is kind of the standard, right? That's why I call it the gold standard, right? That's where it comes from. Gold is a very much, like you said, a loose direct correlation with the market. It's not that the market goes up 20% and gold goes down 20% or vice versa. But when you look at the trends, as the markets start going down, gold kind of lays around a little bit, but when people start really getting nervous and the markets really start going down, then they start going to other areas, whether it be cash or gold. I love the example of 2008, 2009. The market went down 56% over about an 18-month period. Gold went up over 500%.
Right.
And so that is an extreme example, but it was an extreme market as well, right? So it is a great correlation, and it helps with the volatility from a standpoint of if your money's down, if you've got about 10 to 15% in gold, primarily I'm speaking about gold, silver is a little more of a commodity, then you kind of are protecting your losses with the gains in the gold. And that's kind of how we use them.
Yeah. Well, so right now, we've had a pretty strong market since late 2023. And gold being so high right now, why is that? Why is it when it's negatively correlated? And that could be attributed to a few things. Did you want to go ahead?
Yes, a couple of things. I think first of all, the market has been strong, but it's still been volatile. It'll be up several points, and people feel really good, and all of a sudden it's down. I think we got an email the other day from a client that wanted a distribution. And then he waited a couple of weeks and his account was down 3%, even though it was previously up like 20-something percent, and he's like, wow, that was bad timing. Well, it's kind of hard to time that perfectly. But I think the volatility of the market, but also I believe it could be something to do with the election year. We've talked about that. And not that it's a typical election year. We have two candidates that are clearly defined, but both have a lot of negative going along with them. And I think people are like, I'm not sure I want to vote for anybody, and they're kind of a little scared of what may happen. When people get fearful, again, many times they'll flee to gold. I think also it has to do with, the Russia-Ukraine conflict or war or whatever you want to call it. There's some rumblings in China. There's a lot of unrest going on. We got NATO talking about, I think I read today, France is hinting they may send troops to Ukraine. And so that would be another huge deal. And so I really think it's fear. I think fear drives more people to precious metals. And when you think about it, Evan, and you may get into this later, but gold has been valuable since biblical times. I mean, it goes back to ancient civilizations. It's always been of value because it's limited supply. It's not that it's used heavily in manufacturing, it's some manufacturing, but it's mostly just the fact that it's always been worth something, and it's something that doesn't go away. It's pliable enough to change its form like a coin, but at the same time, jewelry, things like that. But I think it's just embedded in civilization that is valuable. So you don't have to worry about, are they inventing a new technology that needs a lot more gold, things like that. That's not where the value comes from. Yeah. And so it is a place that people can flee to, because even cash, fleeing to cash, what if the dollar loses its value? Gold is something you can hold. Gold is backed by itself. What is your dollar backed by? Full faith and credit of the United States. And so I'm not saying that's bad. I'm just saying, again, it's not really backed by anything that is of substance.
Yeah, right now it's absolutely when there are chaotic geopolitical conflicts. We've got wars in Ukraine and Gaza, among other places. Another factor supporting the rise in prices has been the central bank. They've been buying gold since 2022, especially, the central bank gold buying since 2022, especially by China, which drives up demand for precious metals. As Mark said, gold becomes a secure retreat for investors during periods like this that have uncertainty, as well as works as tangible and universally accepted form of wealth. It's a global accepted form of wealth. It doesn't rely on a specific currency for its intrinsic value.
Yeah, every country has a gold supply, and we really don't know how much they supposedly report it. But most countries lie about that, and so we really don't know how much each country has. We certainly don't know how much the U.S. has. Sometimes people kid that Fort Knox is empty, right? But I
don't know. I've seen Die Hard 3.
Well, you're all right. Yeah, that is.
Actually, that wasn't Fort Knox. That was
under the New York.
Yeah,
that was the Federal Reserve Bank, I believe, is what that was.
We'll talk. We've got another episode on comparing all the Die Hards in the future.
Yeah, we should look at that closer. But also, there's something else too. And again, maybe you were going to get into this earlier, later on. But there's the BRICS countries. So you have Brazil, Russia, India, China. I think S stands for, South America, Southeast. There's other countries that have joined it. It's kind of a consortium of countries that are trying to get away from the dollar. They feel like the way we cut Russia off from the dollar, that we could do the same thing to them. And so now they're like, okay, let's have our own currency that we trade in, oil and other goods, and that way the U.S. doesn't control us from a standpoint of monetary policy. And so they are talking about backing that up with gold and silver. Mm-hmm. So that's going to be a huge buying frenzy if they start backing that up. And that very well could drive the prices up as well.
Absolutely.
If that occurs.
Yeah. Well, we have investors, we've already mentioned seeking diversification, which we'll touch a little bit more on that as well. Wealth preservation, protection against geopolitical risks, as mentioned, but also inflation. You talked about that for a moment. Gold can act as a natural hedge to inflation due to its scarcity, and historically, it is a store of value versus paper currencies during inflation. Paper currencies lose value during high periods of inflation. Gold can retain value and even grow during these times. Yeah,
and again, it's just there's so many layers to gold from a standpoint of how it can protect your wealth. And even, if you want to get the extreme to where the country just collapses, you've still got gold. People kind of kid, you need food first, then ammo, and then gold. Mm-hmm. But, that's highly unlikely to happen. But it's still something that many folks will buy, even physical gold coins. Mm-hmm. In fact, that's what we prefer, are the older pre-1933 gold coins, because they are even more valuable because they don't make them anymore, right? And they tend to fly under the radar, so your neighbor doesn't know you have it, and your bank doesn't know you have it, and things like that. So, but again, it's so many layers to what makes it valuable. I think if you don't have some precious metals, your portfolio is lacking, and it doesn't need to be in a mutual fund or an ETF. Because if you buy a mutual fund or an ETF with gold in it, it's going to have other metals, but it's also going to have mining stocks typically and other things. It has fees, and there's not enough to cover if everybody were to get out of the mutual fund. Mm-hmm. So it's just not, I don't think it's a wise way. I'm not saying don't. I'm just saying that shouldn't be the only way you own it if that's the way you own it now.
Well, one of the things that one phrase that you've used to describe gold is wealth insurance.
Right, exactly, because again, it's going to do the opposite. So it's kind of like homeowners. If your house burns down, you can replace it with the insurance policy. Well, if your stocks go down 20 and gold goes up 50, then you've covered those losses with that 10 to 15% of gold. And so it does kind of protect. We've seen, and I'd say probably our clients, maybe 60 to 70% own some form of precious metals, gold, silver. And we've seen it when we have our annual meetings. If the markets are down, the gold is up, and they're almost even. And we have other ways to protect money too, as you know, and we've talked about them on the show. But that is, I think, one of the three legs of how we protect against bear markets and major drops, is that if this drops, this is climbing, and we kind of stay where we're at until the next bull market comes along, and then our stocks will take off again.
Yeah, and we do have clients right now, especially with the price of gold so high, that are selling off some gains to take advantage of that and get into the market.
And moving that back into the stocks, because again, gold is stabilized. I'm not saying, and again, be very careful with this. This is not a recommendation, and I certainly don't have a crystal ball. I'm not telling you what to do. I don't know the listeners out there, but our feeling right now is that we kind of feel like gold and silver have kind of plateaued. So we're taking those profits because they are at an all-time high, and taking some of it, probably not all of it, but some of the profits, and moving it back into the market, because again, we're seeing the market beginning to move up. If that continues, then one day we'll take some of the profits from the stocks and move back maybe heavier in gold, because there's another bear market coming.
Right. And typically we keep about, again, there's no blanket recommendations here, but if we were to do a rough estimate, maybe the average client, we like to, in normal times, recommend about 10% of their portfolio.
Yeah, 5 to 15%, depending on their feelings. In normal times, if we see that that gold is pulled back some and the markets are strong, we might buy a little bit more into gold. Again, it's buy low, sell high. It's a great concept. A lot of people don't do it, but it's a great concept type of thing. So we really keep an eye on that, and we contact and keep in touch with our clients about where gold is and things like that, to make sure that maybe it's time to have a meeting and take a look at where they're at, and do we need to rebalance their assets overall.
Yeah, folks, I want to take a quick moment to refer you to our website, masterplanretire.com. There you can find links to more of these episodes. You can find a link directly to our calendar where you can choose an opportunity to schedule your complimentary consultation with Mark. That's an opportunity to run some reports, talk about your own retirement, get a good understanding of where you stand and your strengths, and then opportunities to better your outlook for your own retirement. And you can also reach us at 770-980-9262. And again, one more time, that website is masterplanretire.com. So let's talk about silver for just a moment. Okay. So silver and gold do have differences, and we have clients who have invested in both. Silver is a close runner-up in terms of popularity as a precious metals investment. Like gold, it has intrinsic value. It's not derived from any other asset. It is less rare than gold, so the barrier for entry can be a little bit more accessible. The price for silver is much lower than gold, but it's also an industrial metal. So it's used extensively in technology, in the medical field, energy production, as well as electric vehicles, which is thought to jump in value as more and more electric vehicle production increases. It's a good option for those with patience and a long time horizon. Why do I say that? Because silver is much more volatile than gold. It
is more volatile. I was looking at a client's account the other day, and they bought it like $15 in 2018, 2019. It got up to 27, 28, 29. It's pulled back to 26, 25. So it is more volatile. And I think it is because a lot of it's used in industry. And we noticed back when it was real low, in the $14, $15 range, a lot of the mines quit producing. They could not afford to produce the silver, selling at $14 and $15 an ounce. So when they did that, inventories fell. Well, when inventories fell, then again, prices rose, then they started producing. So it is more volatile because of it being used much more in industry. If you have a phone in your pocket, I think it has silver in it, I think solar panels. Are they using silver?
Touch screens, solar panels.
Yes. So it is more volatile. A lot of times what we'll do is we'll mix a portion of gold and silver. My colleagues that are experts in precious metals tell me they think silver has a much higher upside over the coming years. But they've been telling me that for 6 or 7 years, so I'm not sure when it's going to spring forward. But really going from 14 to 28, well, that was a pretty big jump. That was a double. That's a 100% return. But it was a short window of time, then it pulled back to, like I said, down to 22, 21, and now floating around 25. So it is more volatile, but I think it's nice to have a mix. One big problem with owning physical silver, it takes up a lot of room. Okay, so, $50,000 worth of gold is 3 or 4 tubes. 50,000 of silver is 4 or 5 shoe boxes full of silver, right? So it is more storage, more of a storage problem. So if it's physical that folks are owning, then we might pull back on the silver side for that reason.
So I do want to actually get into that conversation a little bit, but before we do, let's talk about a little bit about our firm specifically. How long have we been dealing in precious metals?
I think 12 years now.
About 12 years?
We've been a firm for 14, so we got into it pretty quickly. I met a couple of people and began doing some due diligence on it, and it just made sense.
Yeah.
Being a holistic planning firm, we're holistic also across the spectrum of investments, and so we wanted to make sure we took advantage of whatever we could.
Yeah. So for those 12 years, the primary source of our precious metals have been physically held precious metals. Can you explain that process and why we chose that?
Yeah, so again, if you don't have it in your hands, do you really have it? So if it's in a mutual fund or whatever, you just own shares of different companies that deal with gold. And so we like having it, I believe you really own it if you own it. And if you hold it. And so I think it's important to have that. I think you have total control over it. Again, whether it be something happens that's horrible or whether it's just the fact that you've made money, it's easily sellable, and there's no fees attached to what you hold physically. You put it in your shoebox in the attic or in your freezer in a bag or whatever you may do with it. But I just think it's important. And you talk to anybody that deals in gold and silver, they'll kind of tell you the same thing. If you don't hold it, you don't really have control of it. And can you ever really get it? Again, I've seen mutual funds, belly up in 2008, 2009. So what happened to all those holdings? I've seen gold and silver companies go out of business. So I don't want to invest in the company. I want to invest in the precious metal.
Yeah. So these physically held precious metals that we deal in, so basically what you do is you buy from our dealer and they ship it to you. They use specifically pre-1930s coins.
Yeah, 1933 was the year when the government began confiscating people's gold. Think about this. So we had the Great Depression. The government began to ramp up spending to get jobs formed in the early 30s. The problem is the government was spending a lot of money. Where do they get that money? Well, today they just print it. Back then it was backed by gold. So they had to increase their holdings of gold tremendously to back the printing of money. And the only way they could do that was to go and buy it back from the people. Now, it was pretty much forced buying back.
Right.
Now, and they didn't pay quite full price, so it wasn't really fair. But the one thing they did not buy back were coins, because coins were money. Why buy back a coin to back a dollar when it was already a dollar? And so the coins stayed in circulation, but it was kind of a demarcation period to where all the coins before that time were kind of under this umbrella of, nobody really knows you have that. Theoretically, coins after that can be traced. It depends on where you buy them. Definitely if you buy it at the U.S. Mint, places like that. And so you have this matter of secrecy. And a lot of people like to be secret about what they own. They don't want people to know how much is in their IRA, and they don't want to know how much gold they have. And so that is just kind of a way of a client feeling really good about owning something. And again, they don't make those coins anymore, but they made a lot of them. So they're not difficult, super difficult to get. But I'll give you an example right now. Let's say gold's at $21.50 or whatever it is. Those coins per ounce are probably selling around $23 to $24 an ounce. And that will change based on the price of gold and how many people are buying the coins. But they are always worth a little bit more than the price of gold.
In addition to just the spot price of gold, there's more demand for those specific coins.
Exactly.
Gotcha.
Yeah.
And what makes them valuable as being untraceable? You mentioned untraceable earlier.
Well, again, I think it's just privacy. It's just like I don't want anybody, including the government, to know what I own any more than I have to. I pay my fair share of taxes. Whatever information the government wants, I'll give it to them. But again, whether I own, a coin collection, whether I own my grandmother's gold diamond ring or whatever it may be, I want it. It's a private transaction, and between me and somebody else, whether it be a dealer, whether it be my neighbor or whatever, it's probably the way some people feel about guns. We really want to track them, but there's this contingency of people that it's nobody's business that I own a gun and things like that, and so there's that fight going on as well. So I think it's mostly just the fact that this is something that I want safe. I don't want anybody to know I've got it. I don't want my neighbor to steal it. I don't want the government to confiscate it again, things like that.
Yeah, so go through a qualified dealer if you're trying to do this as well. If the people we've worked with this company for 12 years, buying, and then when our clients want to sell, they go back through that company. Don't go to the pawn shop.
No, don't go to the pawn shop. Yeah, so the way our dealer works is they are fiduciary, they are bonded and insured, they are a national company. And so what I like about them is when you purchase at what they bought it for. And again, it's based on supply and demand, so it may be a little bit more than the price of gold. And they charge a 7% uptick on top of that. Mm-hmm. So that's for shipping, that's their profit, whatever it costs them to acquire it. But if we sell it back to them, they sell it to the next person, so they don't up the price by 7%. So you get pretty much a true retail price when we sell it back, as opposed to like buying a car, you're paying full retail. When you sell it back to the dealership, you get wholesale. This one's a much closer spread on what you get versus what it's worth. And so we like that arrangement as opposed to, like you said, going to the pawn shop and getting 60 cents on the dollar for the gold because they need to turn around, store it, and sell it again.
Yeah, well, we are running out of time, but I did want to mention one other thing. About 6 years ago, we were given the opportunity to start investing in precious metals within an IRA, and not funds, not mining stocks or anything else. Actual physically held precious metals in a storage facility. Can you speak on that?
Yeah, so the same dealer we operate with, but we also include a custodian, and so this custodian is kind of like a Schwab. So they report, but they basically. You can own physical precious metals, gold and silver, inside of an IRA. You just can't touch it. You can't take possession of it. So it's shipped to a trust company, kind of a safety deposit box, and it stays there until we're ready to maybe roll the IRA back into the stock market. And then we do the opposite. We have the dealers sell the metals and send the money to the next stock company if we're ready to roll it over. So it's actual physical metals in an IRA. And again, the fees are about $200 a year. We don't charge a management fee or anything else. It's just storage and to pay the custodian to report to you what it's worth and to report to the IRS if you take money out of that IRA.
Okay, one final thought. So you mentioned earlier there's a rule of thumb, buy low, sell high. Given gold's all-time high, is it a good time now to invest in gold?
Again, it depends on the person, the situation. We have some clients that they're going to keep their physical gold regardless, because they just want it available and pass it down to their kids and grandkids or whatever, and just have that staple of stability in that precious metal. Right. Okay, but other folks, again, like you said, selling off maybe half of it or selling off the profit they made since they bought it and putting it in the stock market. So it's really different for everybody. Also, are we really topped out? I don't know that. We feel like we're stable now. But again, based on world events, could it go up more? That's true with all stocks and bonds, right? We don't know. They could keep going up or they could fall down. So it's kind of the same thing with gold.
And commodities markets, also across the board. Folks, I want to remind you to check out our website, masterplanretire.com. There you can schedule your complimentary consultation, masterplanretire.com, or call us at the office, 770-980-9262. Mark, any parting words?
Hey, come see us, and hope to see you soon. Until then, plan well and prosper. Take care.
This was Retirement Roadmap Radio with Mark Fricks of Master Plan Retirement Consultants. To schedule a complimentary consultation, go to masterplanretire.com or call 770-980-9262. Thanks for listening, and remember, plan well and prosper.
All matters discussed during this show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. Advisory services offered through Master Plan Retirement Consultants, a registered investment advisor in the state of Georgia. Mark Fricks and Master Plan Retirement Consultants are not affiliated with or endorsed by the Social Security Administration or any other government agency.